Thank you, Governor, for joining us here at the Salzburg Global Seminar. I'd like to start first with asking you a question about your personal experiences, having found yourself with the responsibility and privilege of playing a leading role in events of such historical significance. What do you think it would be for you the defining moments that you retain, recall and recount in the years to come of the remarkable 2007-2008 financial crisis?
Well, of course, the most dramatic event, of course, was after the collapse of Lehman, because we did have, of course, difficult times in the financial markets since the summer of 2007, but things were kind of improving. And then with the Lehman collapse, then started the real, if you can say, tragic moments. And there were some days when we were kind of close to a financial meltdown. That means breaking up or closing of the worldwide money markets. I have to say that I think the ECB reacted very fast. In fact, in some way it reacted faster as compared to the Fed, because we started much earlier with the expansion of providing liquidity. We were more open with regard to collateral.
A lot of people like you who were there at the very centre of the financial crisis and were attempting to manage it have mentioned that at some points they feared that the whole system could collapse. Was there any moment in that when you really felt that, or is that a manner of speaking?
No, in that sense, because it was such a nightmarish thought that you just it cannot happen. But of course, you have to work, in fact, that it doesn't happen. So you had to provide, especially it was about providing liquidity and inspiring a certain basic trust in the system. And fortunately, I think we succeeded in doing this.
I'd like to ask you about some of the comparisons that have been made between the actions of the Federal Reserve and the European Central Bank.
As I said before, the ECB acted faster. Or let's say we had already in place a number of possibilities that the Fed only had to install later. One has to see there are, of course, fundamental differences in the economic basis between the two regions. For instance, in Europe, we do have a welfare state. We have higher tax rates. That means we have a stronger role of what's called automatic stabilizers. So that means from the fiscal policy side, we have a fast and relatively strong reaction. In the US, this automatic stabilizers don't play the same role, so they do have to do more on direct additional impact. And so I think it's not very easy to compare because some of the fundamental economic issues are different.
I'd like to bring you now onto the issue of unconventional monetary policy and specifically the issue of quantitative easing. The ECB has signalled that in its May meeting it will address the issue. Could you tell us what is being discussed and give us any idea of what you expect possibly to prevail in the end?
Well, this is of course a field where I have to be a bit cautious, but basically the issues are pretty clear. The ECB is now in the process of discussing whether we will have room or the need for going down with the interest rate, with the policy rate again. And it is, and I think there is a certain consensus that we will do this. But there is also a certain consensus that then we have reached the lower limit. And of course, the question arises, if we are at the lower limit of interest rates, what does this mean for other possible ways of action? And other possible ways of action are, of course, some kind of direct activities, and there is a number of them. So one of them would be, for instance, to have a longer lending period for ECB money. So up to now, in our monetary operations, we are acting for a period of a maximum of 6 months. So one could enlarge this to, let's say, 12 months or even more. This would be still in the context of, let's say, our traditional institutional tools, but expanding them. Then there are other instruments that go beyond our traditional tools, because usually we only lend money to the banks, so working by the banking sector. The alternative, and this is what's called credit easing or quantitative easing, is that the central bank doesn't lend money but buys assets, and these assets could be commercial papers. These assets could be corporate loans or other assets. This is a way that has been done in the US, that has been done in the UK, and that is discussed at the ECB, but I can't tell you now what will be the outcome of this discussion. Mm-hmm. I'm aware that there is a public discussion about some fears about inflationary effects of quantitative easing. Personally, I do not see these risks. With the ECB, it's quite obvious, because up to now we are only lending money, so this is on limited terms. So this is a policy that can be very easily revised anyhow. With the US, so with methods of quantitative easing, again, this is kind of open market policy. So if you do it the other way around, again, you can influence the monetary side. So I think from the technical point of view, I don't see any major concerns. It boils down to the question whether there will be a political will to use these instruments.
Now I'd like us to cast our minds to the post-crisis world. And looking back, do you think that maybe that what we've seen over the last couple of years has been quite good for the euro in some respects?
Yes, of course, to a certain extent. I think the euro has proved to be an anchor of stability. I have to say I would have preferred that we would not need this test for this, but it's true. In two ways, it was very important for the countries that are forming the eurozone to be in, because it means that you are not subject to speculations against your currency, as had been the case, for instance, with Denmark, or has been the case with Sweden or with Poland and so on. And also, of course, being the ECB had much greater possibilities to enhance liquidity and to provide liquidity than would have been possible for a national central bank. So I think it's true. In this crisis, the euro had been an element of stability, but nevertheless, we hope that the crisis will be overcome soon.
Do you worry that in some countries who have lost their ability, taking Italy as an example perhaps, to devalue their currency to improve the competitiveness and boost exports, which in the past has been a response to economic downturns, do you worry that the euro could become a target in some countries where it's seen as having removed that as a possible policy response to economic problems?
No, because it is quite obvious that of course, the euro, being a member of the eurozone, has costs and benefits, but the benefits outweigh the costs to a huge amount. But of course, it means that if you are a member country of the European Monetary Union, it means that you have to have a certain amount of discipline, and this is something. If you want to be a member of this club, you have to follow some of the rules.
Thank you very much.